Welcome, everybody. Thanks for being with us today. We are broadcasting live from Park City, Utah, where I am. Gary, where are you?
San Francisco, California.
San Francisco. And Deepak, are you out there too?
No, I'm in Plano, Texas.
Right, Plano, Texas. Forgive me for not remembering. We're welcoming back both Deepak and Gary. We're super happy to have them. As you know, we can't hear or see you. We know you're there. And if someone wouldn't mind just putting in the chat box that we're broadcasting and you can hear us, that would be great, just to, double check, in so much that Zoom had a little crash this week. And so I want to make sure we're broadcasting out there. Even though we can't hear or see you, we do know you're there, and we welcome and encourage you to ask questions as they come to mind throughout the presentation. We're super happy to have Gary and Deepak back. As I said, we're going to be recording this and posting it to the Family Office Insights YouTube channel, as long as it's okay with Gary and Deepak. And then also keep in mind, if when you see the presentation today, thank you for that heads up, that there's others who are in a position to invest in this sort of thing that are part of your network. We're going to make sure that you can be directly in touch with Gary and Deepak, and please, we welcome interest from those that you think would be interested in what you see today. Again, we'll make sure that we put you in direct contact. So thank you all for being here. With that, Gary, take it away. Thank you very much for doing this again.
If questions come up, Arthur, I don't see because I'm yapping away. Just
I got to come.
Yeah. And I wish I could see your faces and names, but this is the style it works. But hopefully I'll get to know some of you folks afterwards if you're interested. My name is Gary Bender. A little background about me before we dive in, and I'll let Deepak introduce himself just so you have context, so you know who you're talking about. I'm a 25-year veteran of the financial services space. Started out as a consultant to the large industry players, Google, Visa, et cetera. I ended up driving the Visa International technology strategy, which back in 2000, before Visa Inc. was formed, and I was part of the team that formed Visa Inc. and merged all the associations. And then I was their head of intellectual property partnerships and innovation at Visa here in the Bay Area at their headquarters for 8 years. It's actually where I met Deepak, where we invested in his first company, and that was over 12 years ago. I'm more on the business partnership side. Deepak's one of the top 5 technologists in the financial services world that I've seen and met over the last 25 years. And before I get into how Carneros started, I would like Deepak, go ahead and introduce yourself so the folks listening know that you're on and what your background is.
Yeah, thank you, Gary. I'm here. Hopefully you can hear me. This is Deepak Jain. I am the CTO for Carneros Bay. As Gary said, I'm a technologist at heart, but I have built a few companies before this. I have built a company in the mobile payment space that was acquired by Square. I built a company in the blockchain space that was sold to a public company in the UK. And now I am also involved building a biometric authentication company that Carneros is one of the portfolio companies of Carneros. So very happy to meet you all, and hand it back to Gary to take you through the pitch.
So I always like, whenever people present to me, I always like to have the end in mind to start, rather than wait 15, 10 slides, whatever it is, to get to it. Before I go through these bullets, you can read them, of course, on your own. Back in 2014, after I was at Visa and been on the corp dev and M&A teams, bought a few companies, I saw really what was the fintech industry really in its first inning. I think we're in the bottom of the second, top of the third inning of the fintech space. We've had a lot of different, cycles, but this is going to be an extra inning game. This is not a 9-inning game, and we're a third through it. I knew there was more to do outside of a large company, even as great as Visa is and was. I I saw the writing on the wall. I left. I kind of went back to my consulting roots, started consulting with some very large tier one players. You'll see some names later, and started Carneros started out as a closed loop incubator, but with 5 of the top 10 financial institutions where we started companies. We sold our first one. But as we talked to dozens, if not hundreds, actually hundreds of banks of all sizes, we realized there's a bigger opportunity to take our expertise, my expertise, Deepak's expertise, and we now have 85 people like Deepak and myself, all with 25 years experience, some retired, but driving and really playing a key role in the spoke of this fintech world. And we'll get into the meat of it later on. But as a family office investor, what you're looking at is this is truly, if you're interested in fintech, this is a very unique fintech investment opportunity that offers distributions of cash and also equity growth positions. We're not a fund. We don't do a 2 and 20 carry. It's just how we've evolved. We do have the multiplier effect of a fund, but it's due to the fact that we get equity, non-investment equity, in highly de-risked fintechs that we see through our deal flow, that we get from our tier one banks, from our fintech banks, from our investor group, et cetera. And we have revenue share with over 20 fintechs across all pieces of fintech, from cyber to wealth management, payments, et cetera. So it's a unique beast. We'll get into the details later. To date, we have investments from 13 family offices for over the last 7 years. They've ranged from 50,000 up to, I think the largest was $1 million from our billionaire friends. But lots of fintech veterans who are investors who've known me from the space. 3 very, very high profile, investors you'll have heard on CNBC or Bloomberg. Nice family. We really a family of family offices. So the opportunity for those listening, we're seeking up to raise up to 3 to 3.5 million from folks like yourselves. We don't fit. There's a couple micro VCs and private equity owners that like us, but we don't fit a traditional VC model because we have it just doesn't fit their thesis, because we look like a fund of funds to them, even though we're not. So 50K minimum. We're flexible. We have a couple that came in under. But as you hear today, and if there's any interest in learning more, we'll talk through any of those details. All of our prior investors are happy to talk to and want to talk to future investors, because we really do operate as everyone knows each other. They didn't know each other before, but we're all kind of riding this wave together. And ultimately, there's several attractive exit opportunities, especially just for the mothership of Carneros within 3 to 5 years. We've had exits of our companies that we've launched or that we partnered with that we benefit from, and our early investors are already playing with house money. All right, so we play with this slide all the time. How big is fintech? It's a sort of an obligatory slide in many decks that we all kind of can gloss over. But if you're interested in fintech or watch it, you probably know it. You probably could pick any number on this and say, I see a different number. We follow CB Insights, FT Partners, all the folks that follow fintech. Fintech is a very, very large vertical, very large industry in of itself, but it's both a vertical and a horizontal. Every industry, whether it be healthcare, education, government, has a fintech component, and it's only starting to evolve. Money is involved in every part of our lives and every industry. Back a few years ago, fintech was half of all VC money. It's still between a third and half. There have been a couple bumps and bruises for some high profile unicorns, but we saw that coming, frankly. Their business model was unsustainable. They raised too much too fast. They exaggerated things, and we knew that was going to happen. I mean, for those particular ones, so we stay away from that kind of stuff. We know the trends. We have friends in the space, but the size of the market is plenty big. Some of the trends, fintech, 10 years ago, even Apple Pay was having a hard time for adoption. Now everyone's, I was in the room with Steve Jobs' right-hand man, the treasurer of Apple. We launched Apple Pay when we were at Visa. and it took a while. We kind of understand how consumer and merchant and bank trends work, but the adoption rate has been increasing. So that when I say an adoption rate, that means the solutions that are being offered to that you see or the bank offers or the bank sees, they're being adopted. Banking is going more and more mobile. And, you know, I'm a payments guy because I learned the ropes in financial services from Visa, but we're talking digital payments is where everything's going. And that's a good thing for all of us, more efficient. We get our money sooner, we invest it more quickly and more effectively. I mentioned this, that fintech is a vertical in and of itself, but it crosses horizontally across all markets. Some of the major, you know, blockchain and digital currency, you see talking about on all the business channels, especially digital currency and crypto. Blockchain has been around for a very, very long time, but it's becoming a little more mainstream. That's a huge space in and of itself. Every one of these little pieces of the world, big data, AI, machine learning, you know, Web3, small, medium-sized business, fintech, they're just in the early innings. So as things digitize, as things automate in this metaverse evolution, which is just Web3, everything continuing to be connected, it's just a huge opportunity for fintech. And frankly, it's early days in the space. Deepak, anything I missed on that you want to elaborate on?
Yeah, no, I think the context here for us is that as Carneros, we see the companies that are focusing on these areas of fintech, and it gives us a really great viewpoint in the market, because all of these companies start off as private companies. It's not really visible to a lot of investors. And we see the banks and the financial institutions also interested in these companies that are innovating in these areas. So we sort of sit at a very interesting vantage point as Carneros, looking inside out from a bank's perspective and outside in from a fintech's perspective on how these things are coming together. So that's really relevant to how we operate in the market and how we make our business growth.
Would you guys mind an editorial for a minute?
Please.
From you. So because the merge happened in Ethereum just recently, is that optimistic for payments? Because the gas, the fees, the electric, how much it costs, the slow transaction, are you optimistic because the merge happened, or is it sort of irrelevant?
It depends on the vantage point from where you look at that. So if you are a large bank or a large financial institution looking at that, it is still several hurdles away from a mass market appeal, right? There are still too many questions on compliance, still too many questions on security, authentication, scalability, and still way too far away from a large financial institution's viewpoint, right? But if you are looking at it from a fintech's viewpoint, who are innovating, and they are trying to bring new services and new solutions to market, that is definitely removing a couple of
Iterations, yeah.
A couple of blockers of why Ethereum was not a scalable and an affordable solution, right? But they are not the only one, which is really the exciting part, right? Others have solved that problem already, way before Ethereum did, right? So what this does, it sort of, levels up the playing field a bit, so it's definitely an interesting interesting milestone. But from where we sit and we look at the large finance institutions, they are more interested in solutions that solve real pain points for their customers. So whether it uses Ethereum or Solana or Hedera or some other blockchain technology is not that relevant yet, until there is a clear leader that emerges that solves the issue of security and authentication, fraud and compliance, and all of those things.
Yeah, super helpful. Thanks for sharing that with us. Carry on, Gary.
All right. So a little bit digging into Carneros, how we work, who we are, and how we make money and create value for everyone who's a stakeholder. It is based on relationships and partnerships that we built over the decades. When I left Visa and sort of decided to start to consult with some of these tier one institutions because of what I was seeing and what I knew, and the hundreds of millions of dollars of money I spent on Visa's dime doing diligence around the world in banking and payments, security, identity, and fraud. I had that conversation, and I knew we can, between Deepak and myself and the team, we can pick up the phone and talk to the head of Goldman or TD or Bank of America or Citi. It's that bat phone is really one of our biggest differentiators, second to the fact that our expert network. I started out with 8, experts from Visa who built most of the, technologists and strategists from Visa. We're now up to 85, not all from Visa, but they're from Intuit, they're from PayPal, they're from banks, you name it. So our expertise cuts across all areas of fintech, and even compliance, and we've actually acted as chief, compliance officers for banks as they needed it, as the regulators came in and gave them a scolding. But so we have kind of this hybrid model. If you look to the left, we're a venture partner to investors. What does that mean? Well, we've gotten to know investors as we've launched companies, as we've advised companies, as we've had investors come into our network. They come to us and we help them, with diligence. We might advise one of their startups. We advise many of their startups, and we get some equity kickers for that. And cash as well. We are a strategic partner to financial institutions. Same thing. We'll go through some of our customer names later, but they're household names. We do a lot of diligence for them, M&A and IP and technology diligence. We help them with their fintech engagement because they need help in navigating the landscape. And we're a hybrid incubator and accelerator. So we've started our own companies. We started Carneros with the concept with these banks that we will start companies. We knew where the world was going. They told us what they wanted, so that's what we did. So we were an incubator of sorts. We just launched a company last year. If you looked and did some research on Carneros, Wink, which Deepak is CEO of, is going very, very well, very, very well. It's an identity, biometric identity and payments platform, which is where the world's going. And we're an accelerator. We have 20 fintech contracts. So 20 fintech contracts. That means we have contracts with 20 these are not just conceptual companies. They've had their seed round or even their pre-A round. Sometimes they're A round. And we've been working with them. We work with them at those early stages. We only work with the best of the best. And we help qualify them, make sure there's market fit. And we get a piece of their company for getting them into our network and helping them succeed and getting into our banks. I saw a question pop up. Should we address it, Arthur?
Sorry, I was on mute. Let me just look at it real.
It says, could you present, and this might be one easy one for you, Deepak, since we've been in this space, but could you present a real blockchain startup use case incubated by us?
Yeah, I think Wink would qualify here. It's a Web3 identity.
Yeah, good idea.
It's a Web3 identity startup. So essentially what it does, it allows a consumer's face, voice, and device data to be housed in a blockchain wallet that can be then used for authentication. by any app developer who wants to eliminate username and password from their ecosystem and adopt biometrics instead of old style of authentication. It can be adopted by any crypto exchange, any crypto wallet, even regular banks who are looking to Web3 for modern ways to authenticate. Um, that's what Wing does. So that was incubated about a year and a half ago, and um, is one of our portfolio companies.
Good
Continue.
question. And timely. Thank you. Good plug for Wink.
And that also, if you don't mind me, is one of the things that Carneros Bay catalyzes, is the business development of that sort of service, right?
Yes, absolutely. So as Gary just pointed out of the suite of services we offer, one of them is opening the market for a new company, right? Whether it is a company that we incubated ourselves, or whether it is a company that came to us that had a recent round of funding, that has their team and technology sorted out, they have their product sorted out, but they are looking for those go-to-market partnerships that will allow them to test their product, deploy pilots, and even do commercial agreements, right? So we enable that through our ecosystem of experts. And we have experts who can not only become extension of their teams, but they can facilitate the early conversations. They can also, our experts can also segment the market and target the market for these type of fintechs, so they don't waste time, you know, and cycles trying to figure out who might be the best fit and how to get to them, and so on and so forth.
Yep. And in the
So
case of
there's a
in the case of
follow-up
Wink,
here.
we have a, Carneros, any investor in Carneros gets a pro rata equity interest in Wink. So that's the diversified opportunity and from an investment standpoint.
Yeah, and if I can just quickly editorialize, and maybe we can do this follow-up question. But Gary, 3-4 months ago, helped me not make a mistake on something.
Oh, that's right.
So
That was a good one.
Yeah, I just to say out loud and clear, this is the sort of thing that is super valuable. Like, it's not just where to put the money, but where not to put the money, right?
Oh, it's what not to do. It's where not to put your energy or money. Absolutely. And I'm glad that you reached out on that one. And I know you are too.
Yeah, me too. Deepak, do you see the follow-up there, or you want me to read it?
Yes,
Oh,
yes. No, I
right.
see the follow-up.
So let's read it so everybody else. Sam is thanking us to answer the last question. What's the criteria to select the best project, and what is your process? Did you take tokens, shares, that sort of thing?
Yeah, so we are not a company that's entirely focused on the crypto space. In fact, we have not taken any tokens from anyone as of yet. So we are really opening up the market for the large financial institutions to adopt technology, right? And we are looking at real world customer problems or real world business problems that are interesting to these financial institutions. And that's really the criteria. So when we look at the project, we look at the team. First of all, is the team capable of solving a critical problem? Then we look at the problem and the approach. And in many cases, we can consult with that fintech to fine tune their approach if we find gaps there. And then we look at, what is the stage of the product, and if the product is really ready to hit the market, then we take that fintech company on, and we help make the introductions to the potential buyers of the technology in our ecosystem. So we are heavily focused on the large financial institutes, and and really problems that are appealing to those financial institutions, right? So will a Wells Fargo, will a TD, will a Chase, will a Square, will they adopt this technology? That's the type of project that's in our sweet spot. Having said that, we will sometimes look at more long-term vision type statements as well, especially, those then become incubation opportunities for us. If we get a great idea that has not been developed or the funding has not taken place, but it has a promising vision and might come to fruition in a longer term, then that becomes an incubation opportunity for us.
Yeah. Sam, just the last part of that question, then we'll keep going, but appreciate the questions. Keep them coming. So yeah, so shares, we take shares in companies that we take on. If sometimes cash and shares, depending on it. And, definitely from the large financial institutions, we take cash. Our first company, by the way, we started was Hedge, and it started out, and it as most companies do, evolve, pivot, whatever word you want to use. It ended up becoming a crypto custodial platform that was sold to BitGo. So it basically was this platform to allow institutions to start, really, making crypto trading viable. All right, so on to the next slide, a couple of slides. I think Deepak, this is you're going to cover the next couple ones.
Yeah, absolutely. I think we walked through most of this already in terms of about how we are able to succeed in this ecosystem. It's really got three big reasons why. We have, as Gary pointed out, a team of 85 experts that can be your product expert, could be your IP expert, they could be your head of sales type of person, they could be your head of partnership type of a person. And we can pick anyone from that expert team to solve a problem, either for the bank or for the fintech. And because of that, we create significant engagement and deal flow. And a lot of fintechs call us. We don't have to set up a outbound.
Yeah, everything's inbound.
It's mostly all inbound. We've got fintechs coming in and saying, "Hey, Carneros, we know you guys do this with all the large banks. Could you help us solve this particular problem?" And we take that and we put them in part of our process. And then we do have existing contracts, and Gary will walk you through some of those with large banks that allows us to short circuit onboarding, compliance, some of those things for some of our fintechs, because we can get them under trial, under market adoption in our existing MSAs that we have with the bank. So as part of then value creation, we can take advisor equity with these companies, especially the fintech companies that are looking to sell to banks. We can also do rev share with these companies, as they are, especially when they are ready to enter into commercialization contracts with some of the banks. And then when we look at the bank side of things who are buying in this market, we help them with IP licensing and with advisory fees. So if the bank comes to us and says, "Look, we would like to create a position here in Metaverse, could you help us with our IP strategy?" We can take on that project and use our expert networks and create that type of an IP licensing portfolio for them, which could be developing new patents or acquiring patents or licensing them. And similarly, on advisory fees, we can do similar type of projects for the buyers. And essentially that sort of creates a flywheel for us, because a lot of these experts engage with emerging startups. We help these emerging startups then engage with established fintechs who are already in the market, who are always looking for new technology. And then these growth fintechs are the ones that are engaging with the large financial institutions. And oftentimes we have people who will then exit from large financial institutions and they want to go create their own startup, and we can help them through our incubation project. So that creates that flywheel for us, and it's a very unique model that doesn't exist in this ecosystem. Not no venture capitalist does this, no incubation firm does this, no acceleration firm does this, and or no advisory and consulting firm does this type of model, right? So we are sort of that combo of those four popular business models that creates this interesting flywheel for Carneros. Go ahead, Gary.
All right. Do you want us to hit the question real quick, Arthur?
I'm just typing the answer. Let's keep moving.
Okay. I'm going to flip flop these here real quick. Well, okay, we'll do this. I know we're getting long on the time, but here's a little bit of a view of our ecosystem. So the ones on the left, are ones we have contracts with, MSAs. This is not exhaustive. We couldn't put them all on here. Wells, Square, MasterCard, Lincoln Savings Bank was the bank behind Square Cash, TD Bank. We have a hot phone to all of them, as well as Wells Fargo and many, many others. Then if you go across the right here, these are our partners. These are our contracted partners. We have service providers, Pay Forward, Credit Sesame, Boost. I won't go through what they all do, but these are service providers that offer some of them you probably recognize, like Credit Sesame, but maybe the others you don't. But they all offer, different services to the ecosystem of banks and small businesses and whatnot. The Fintech group, new retirement wealth management platform, Finata banking as a service platform, and on and on. This is just exemplary. I couldn't fit it all on one slide. And on the right, the innovation cohort, this is what we've done. We've launched Hedge. Like I mentioned, we sold it. We launched Let You Let. That's a partnership we have in the home sharing space, and it's a partnership with Airbnb. It's a very, very lucrative one that will have an exit in 2 to 3 years. It started out as a payments platform, but it's an entirely other solution that incorporates payments. Comet is one that we're incubating, accelerating with some folks that had an idea, and then we helped them make it better. And it's an early stage one. And Wink, you guys should take a look at. It is a very thriving. We've already covered it, but it's one of our exciting projects now. And so those are the kinds of things you get a piece of as an investor in Carneros, as little or as much as you might want to put in. You get a piece of all of that action. You get the revenue share we get from those fintech partners, from those service provider partners, from the bank partners that we get recurring revenues and consulting fees or advisory fees for. From our, we have equity in 7 companies. As those, and the folks that were investors in Hedge, they've already exited. So it's a unique world. This is a little bit of a timeline. We started it in 2015. We've been in business a while. We've been very, very careful with our dimes and nickels because, you know what, some of my largest first investors were some billionaires down in LA that taught me the value of slow and steady versus, grow, especially as our model in our ecosystem evolved. If I were to go back 7 years and say, this is how this is the map I was gonna follow, I would not have been drawn this. But I'm very fortunate and very happy that to be where we are. And this is the first time we're really going out to outside of our just close network of investors to offer an opportunity to invest in this. Very favorable terms. That's how we work. We want everyone to win and benefit from what we've built. And just to give a sense of and putting this all together, let's get it back. I put my, how does this come together from a numbers perspective? Here we are, we've been at it for a few years, but after 3 years, we pivoted from the closed loop incubator to the open model, which means we weren't just, providing it for Chase and MasterCard and TD and Wells. We open it up to all and developing our own solutions. We then open it up to all fintechs, not just ones we build. And that started and the revenue generation, rev share piece. So we have a revenue model in the blue. We have our equity and IP model in the beige, and the total in the whitish. I mean, we've already seen significant growth in the last couple of years in our equity positions. The revenue growth, if you look, why is your cash so low? Well, we've been focusing, again, our model was more about incubating. And now that we have those contracts, we just need to service our contracts. So that goes to our use of funds. It's just a few more people. We don't need to do marketing or advertising spend. It's just execution to prop up the value of our equity positions in the fintech partners that we've taken equity in, that we've chosen to, and to prime the pump for the ARR increases. So kind of to wrap it up, and just take more questions or whatnot.
Hey, Gary, can you slide back to that prior slide? So this is what strikes me different than what you said, and I'm not arguing with you, is I'd much rather have an exponential growth in equity, because that's how the company's going to do well, than have cash flow, right?
I agree.
So I don't think it's a negative that the cash flow is what it is. I think it's a positive that the preponderance of what one will benefit from would be in the form of equity.
Yeah, I agree. Well, it's funny. I think it's a great chart. I think it's, and all of our investors do, current investors do. So it's a couple of people really like, and I guess I'm looking at it from an ARR kind of traditional cash is king perspective, but maybe I watch too much CNBC.
Yes, right. Yeah, totally get it.
All right. Well, I know we took a couple questions on the way. Again, kind of full circle. It's a reason why we're focusing on family offices. I think we're a good fit for family office investors. And we covered some of this, but you get a diversified exposure in fintech. We really have some investors who don't want distributions. They just want us to reinvest it into our model. And some actually kind of want distributions. So that's the kind of thing that we're flexible in doing. We generally do not take our capital invest in companies, but we did. If you look at press releases in Wink and Carneros, we actually put some into Wink, because that one was that we knew we should have. And frankly, if you guys have any other, or have friends that have fintech investments or are considering ones, just like Arthur mentioned earlier, you get access to our team of experts and ask us questions anytime. We can give you sometimes quick answers right away, and then just help you navigate the industry. So I think that's kind of where we are on the timing for this. We're just going to use the funds. Again, flexible. We have a price to per round approach. We have a convertible note approach. Some people don't like one or the other, but most people like priced rounds. But really, it's a function of executing on what we've built, and adding some good folks to the family of family offices that we have already.
Yeah. So if somebody wrote, let's just make it an easy number, $1 million check, and they wanted the price round, you don't have to, because the valuation is kind of a guess anyway, although you guys probably have some idea. Is it, and since it's not a fund, it's just equity in your company, right?
Yep, you get equity in Carneros, and $1 million will be a nice spot at the cap table. It's not going to be, not a tiny piece, it's not a huge piece, but a good, a reasonably good sized equity piece. Yeah. And then Carneros again has the equity in Wink. We have it in Comet. We have it in LetYouLet. We have it in Kazoo. So then that pro rata equity trickles down into our equity positions in those portfolios.
Yeah.
So when there's an equity event for LetYouLet, say you had 7% in Carneros, and that 7% equates to, and we have 28% in LetYouLet. When LetYouLet exits, then boom, easy algorithm for
just commensurate with the amount of investment, right?
Exactly. And frankly, anyone who's an investor in Carneros, almost all of them have invested in LetYouLet and or Wink. That's sort of They don't
Yeah.
have to. They don't have to, but they know that they've seen the track record. Yeah.
So without, I actually don't want you to disclose this, but I'm going to ask it in a way that I think will be valuable to know. If there was a 3 to 5 year exit for Carneros, what's a suspect look like that would buy you?
Oh, by Carneros?
Yeah.
We actually had an offer to be acquired last year by, how would you describe them, Deepak?
Yeah, it was a, I would say, again, a private equity slash advisory firm with that were also doing joint ventures with some of the larger advisory firms to solve particular problems. So they really saw us as someone who would lead their innovation practice, right? So the suspect would be a larger private equity or investment banker who wants to create a innovation practice or run or scale their innovation practice. That would be a suspect, Arthur.
Yeah. Very helpful.
A corporate venture group could also be, right? I mean, because all these guys want to have all this intelligence on their roster.
So there was a time, Deepak and Gary, where there was multiple facilities and people bringing technology to large institutions, not just fintech, and the activity was massive amount of, okay, let's find companies that solve a problem and let's wait till the ones that fail go away and the ones that survive that actually solve the problem, took the risk out of it for the innovation group, for the large corporates, and then they would just acquire. I mean, Google's a whole different thing, or Facebook and all that, but is that activity still very, very high on their list, especially in the fintech area?
Yeah, I think all of the banks have an innovation practice and they really want to grow those innovation practices. So the problem today in the industry is they get calls from VCs who are only talking about a company who wants to use that bank as one of their customers.
As a pilot, right?
As
Yeah.
a pilot,
Yeah.
yeah. Or they get calls from sales and marketing type agencies that do not have the technical depth. They have no idea if the product is good or not. Or they get calls from investment bankers who want to sell a particular company to them, right? But they don't get a 360-degree view of a particular opportunity that they can get with Carneros. That's where we really shine.
Totally makes sense. Yeah, because you've cleaned out the noise for them, right?
Exactly.
Yeah. Having family office insights, it's not a secret. We get 200 applicants a month, right? It's kind of daunting, but it's pretty easy to cut through it. But because we have a different objective, right? We're just want to make sure people are interested in who's presenting as opposed to writing a check into the company. But it's narrowing the fire hose is super valuable. It's about bandwidth, right?
Indeed.
Yeah.
So I think with that, there's other things we can talk through. There was a question about that I think I've already answered, so everyone can see that. But I hope those that attended or would get in touch, ask questions, critique, even if you're interested in some of the portfolio companies or specific attributes of what we're doing for some of the banks, let's chat. And thank you, Arthur, for the time and those that participated.
You're very welcome. I just want to be clear from your perspective. There are often people who are on the calls, on these Zooms that have something they're invested in. You're welcome, Sam. And that they might want to bring to the table. Are you open to that, or do you want to just temper the open door policy of looking at companies that might be interesting?
No, actually, thank you for bringing that up. If anyone wants to, no, open door policy. We are better served and better service and do better service to our customers and our stakeholders if we are aware of, and if we're not already aware of something that someone's involved in, if someone wants to bounce it off us and we can give some insights and maybe even work with them. That's how the world works.
Yeah, perfect. I just want to make sure
Thank
don't inundate you on with if you didn't want to be, right?
No. And thank you, Sam, for the questions. I appreciate those.
Yeah.
Yep. And thanks again, Arthur. Thanks, Deepak.
You're welcome. Thank you guys, Deepak, Gary, for coming back again. Love having you. Super, super interesting stuff. Very, very sophisticated way to do this. And thank you, everybody who's on the call. As I always say, thank you for sharing with us the only thing you can't make more of, and that's your time. Till next time.
Thank you.
Thank you
Take
very
care.
much, guys.
Thank
Okay.
you.